All right, so now I'd like to welcome to the show Nick Anthony, policy analyst at the Cato Institute, in particular the Cato Institute Center for Monetary and Financial Alternatives. Thanks for being with us, Nick.
Thank you for having me here.
And longtime listeners will, of course, know that Nick was with us originally in episode 53 back at the end of 2023 to talk about central bank digital currencies, an issue which we have now won for the moment, thanks to Nick. He's only our third ever returning guest up there in the elite fraternity with Ian Murray, my colleague, and my former colleague, Patrick Hedger. So, Nick, let's get into the problem of debanking and the question maybe we should start with first on every topic, which is what is debanking, and we can take as a starting point the recent article you wrote about the two kinds of debanking, operational and governmental. So start us off with what is debanking, period, and then what are the two types?
So, at its simplest, debanking almost is what it sounds like. You get cut off from financial services. You have your accounts shut down and you've been removed from your bank or the financial system. It's really as simple as that. And I'm sure a lot of folks have seen this in the news recently with concerns about discrimination against conservatives or religious groups, but also shutting down the accounts of cryptocurrency groups or cryptocurrency users. And so it's really getting a moment in the limelight. And as I'm sure we'll get into, it's not the first time that this has happened, but it's really heated up in the last few months. So I'm glad you teed up for me that there are two types of debanking to get into, because on one side you have operational debanking and the other side you have governmental. There's certainly some overlap, but what those two distinctions really boil down are who is making the decision to cut off someone's account, who is making the decision to debank someone. On the operational side, that's where it's private businesses making decisions about their day-to-day operations. So we have mundane cases where it might be someone has overdrafted an account too much, they've been late to their payments too much, and they'll be cut off because effectively they weren't paying for the service. So that's one form of operational debanking. Another, though, can be far more grand, and far more controversial for that matter, where institutions will decide they want something to be part of their corporate mission. And there we see things like certain institutions have decided not to service the pornography industry, or some don't want to service the oil industry or gun industry because they take different stance as part of their corporate mission. Now, on the governmental side, that's where you have governments making the decisions about how those private businesses should operate. And there, most infamously, as you mentioned, Ian Murray has been on the show and he's worked on this quite a bit with Operation Choke Point, the operation that took place from around 2012 to 2017 with the Department of Justice and the FDIC and other regulators using the financial system to effectively choke off disfavored businesses. But then you also have other cases. We recently saw in the Supreme Court where a regulator targeted the National Rifle Association, or NRA, and was using her power as a regulator to urge businesses to cut off services to this group. We've also seen recently with Freedom of Information Act requests conducted by Coinbase that the Federal Deposit Insurance Corporation, or FDIC, has been sending letters to banks telling them to stop interacting with cryptocurrency or stop using cryptocurrency. But then finally, I'll end on there's also more implicit forms of governmental debanking. And that's where you have things like the Bank Secrecy Act regime or supervisory letters that make it that result in it being so costly under the regulatory burden to serve customers that banks ultimately say, I'm sorry, but we can't do business with you anymore. And so that's the debanking issue in a nutshell, where there's the two sides of it and the general concern. We're probably going to see a lot more of this over the coming weeks because it's clearly become a hot button issue for Congress, the administration, and really the American people.
Right. So there was just, I think last week there was a hearing in the Senate Banking Committee about debanking with new committee chairman Tim Scott of South Carolina, um, and he had a few majority witnesses there to talk about their own experience, including, I believe, from the Black Rifle Coffee Company, who some people may know. That has its own corporate mission, right? Usually, when we talk about things like environmental, social, and governance, or ESG, these sort of things, where you have a private corporation, a for-profit company, but it has this other sort of social mission. A lot of those are tend to think as more left side of the political spectrum social missions, right? You think of climate change or human rights and fair trade and all that kind of stuff. But there's businesses that have social missions that are more on what we would consider the conservative or right side of the spectrum. And so that company that makes coffee, they're also big in favor of supporting the U.S. military and law enforcement and veterans and the Second Amendment and things like that. And so it's interesting to see how this plays out, where you have, like you said, you might have a bank or a financial institution that decides, well, our social mission includes not not supporting the Second Amendment and firearms, but you could just as easily, as you have in the case of this company making coffee, they say, well, that it's ours is exactly the opposite, and we want to support the Second Amendment and firearms, and gun owners. So, uh, you know. Like, what have you seen from the most, like you said, there's a lot of attention on this right now. What have you seen from the most recent, not so much maybe the Operation Choke Point stuff from several years ago, the Obama years, but what has been the kind of the stuff that's been bubbling up just recently?
Well, first, I just have to say you're absolutely right that we're very lucky in this country that we have a wide playing field of options. And one of the people who testified there, I just couldn't get enough of. I was loving it was Old Glory Bank's CEO Mike Ring, and one quote that just struck out to me was he said, instead of whining about what other institutions were doing, we decided to start our own bank that would have open arms to everyone. And that's how the competitive system should work. And that's what we need more of. And especially with everything that's going on right now, because we've seen concerns bubble up in terms of people are losing access and, or rather, are becoming debanked or are debanked, and they don't know what happened. They're left in the dark because under the current system, by law, much of this is confidential. So they're left to just spiral in the dark to try to figure out what might have went wrong, and they have no indication and no idea how to prevent it in the future. Then you have these high profile groups that are also experiencing this. And there it equally becomes a concern because then people start waving the flag saying, hey, that happened to me too. And you get into a tough situation from the policy response because what happened to group A and what happened to group B might be totally different issues when we're thinking of the roots of this and how Congress needs to respond, even though in the end, as far as they know, they both had the same experience of being shut down.
Right. And so the sort of secrecy, sort of official secrecy, but then also, uh, you know, banks have some ability to share information with their customers. Not everything is regulated by law, but a lot of times banks choose not to give these customers more details when they close their accounts because they don't want to start an open-ended conversation, right? The more information you give, if you say, well, we shut your account down for these five reasons, then you just get a customer arguing why, giving you five different arguments why it's incorrect. If you can sort of get out of it easy and say, oh, well, we can't tell you, and then that's it, the conversation's over, then from the customer service side, the bank is just, they just get to move on with their life. Um,
Yeah, exactly. And that's something that I think needs to change in a big way, but not quite the way that I think some other folks have argued. I'd like the confidentiality to just be taken off the table. I don't want one, I don't want them prevented by law from sharing information they want to share. But two, I want them to have the ability to tell people, but I don't want to force them to tell people. If they want to leave people in the dark, that should be their own bad business practice. That should be, they should weigh the risks of how they want to approach that. Because there is an art to it. Anyone that's been in a room with human resources knows that there is a certain art to whether it's bringing someone on for the first time or saying goodbye to them for the last time or interviewing someone about an incident or even just in our personal lives. It doesn't even have to be professional. Think about in the dating scene, breaking up can be a very messy thing. And so, how they want to handle that, I want to leave up to them. But what I don't want is for this huge veil of confidentiality to be used to hide the entire process when it is happening and when it isn't happening, rightfully under that veil.
Right. So, I mean, we should say that the background to some of this goes back, decades with laws that regulate banks, bank secrecy, bank privacy, and the rules that are called Know Your Customer. And so, a lot of these had to do with federal law enforcement priorities, where federal law enforcement agencies and counterterrorism agencies are essentially trying to deputize banks to do their sort of, due diligence and investigation work for them in a way that doesn't really apply to most other industries, right? So it's a little unusual, and so so people might ask, well, why would there ever be a reason why a bank couldn't tell you why you closed your account in the first place? That might seem confusing, and the supposed rationale, at least, is that well, if the FBI comes to a bank and says, "Oh, well, we're investigating one of your customers for money laundering or for, terrorism financing," you don't want the bank to then tell the customer, "Oh, by the way, you're being investigated for terrorism financing because maybe they flee the country or something." So there's a sort of like grain of truth and real argument behind why there might need to be secrecy in certain times and places. But I feel like that in the financial services industry has been sort of very conveniently overused as a reason just not to give your customers explanations for anything, right? So there's the idea that like you might want to not compromise a terrorism investigation, seems pretty legitimate to me, but usually that involves court orders and
Hmm.
due process and is not just a blanket policy for every policyholder.
That that is such a good point because I really want to make that clear for folks who may not be as familiar with how the system works. When you're talking about filing suspicious activity reports, saying, I think there might be a terrorist or something, it is confidential by default. That is the first step. Whereas I think you're absolutely right that there probably are cases where there's concerns and the next step should be saying, here are the legitimate concerns. Let's get this signed off to have some extra guardrails of protection. And also, I'll just add, uh, folks are starting to recognize that exactly as you mentioned, it's the claims have been a little dubious. The claims supporting the Bank Secrecy Act and the way that it works have been a little dubious, and folks are starting to take notice. I recently spoke at an event with former CFPB Director Rohit Chopra, and when we were talking about the Bank Secrecy Act, he specifically acknowledged that it doesn't quite make sense because if you close down someone's bank account, you're tipping them off that people know something odd is going on. You're effectively telling them there is something going on. So at the very least, maybe you don't have uh I I'll say full disclaimer, I want vastly more reforms to the Bank Secrecy Act, but in a very small case, maybe you don't tell people when it's happening in the moment. But if that's the reason that an account was shut down, then the confidentiality should be wiped away because they're already going to have a pretty strong hint, if nothing else, that there's some uh, there's some surveillance going on here and people are on to what they're doing.
In any of these law enforcement cases, eventually, if it comes to the point of someone being, indicted or, um, facing criminal penalties, obviously they become aware of it at that point, right?
Yes.
If you got to show up in court, it's no longer a secret whether you're being investigated, and so the severity of the penalty you are facing should be consistent with the amount of due process you are afforded. Right? Um, so we have, again, we're sort of dividing things into twos, and maybe we can divide them into twos again. When you have the government sort of putting their thumb on the scale about whether someone's account gets closed or not, um, I feel like there's the stuff we've just been talking about, which is the Bank Secrecy Act and these reports that have to be filed about suspicious activity or supposedly suspicious activity. And then you have what happened in New York State, like you talked about the case of Maria Volo and the NRA, where it's pretty nakedly partisan and ideological. And there's someone who just doesn't like an industry, or doesn't like a business, or in the case of the NRA, a nonprofit organization. And that's sort of what we had with kind of, like you said, Operation Choke Point back that government project back in the Obama years, where there were small businesses like payday lenders, and there were people in the federal government at the time who says, I just don't like payday lenders. I don't like them. I think they're bad. I think they shouldn't exist. Um, but the people who felt that way couldn't they couldn't get Congress to pass a law banning payday lending, right? But they also couldn't, or presumably didn't feel they could just publish a rule, a regulation in the executive branch saying, you know, payday lending is illegal. So they did it the sneaky way, the non-transparent, non-democratic way, um, and they did it kind of like mafia intimidation style, right? And they say, oh, well, we go to this big bank and we say you've got this small business client that they're a little shady, according to us, and maybe it would be better if you just dropped them, just drop a few of these little, poison pill small businesses we don't like, and then we won't cause any problems for your giant multi-billion dollar bank. Um, and obviously, the latter of those two is the more emotionally infuriating ones, right? So someone might get jammed up because they are running afoul of some 50-year-old bank regulation that's non-ideological, or they might get jammed up because some ideologically motivated bureaucrat is putting their thumb on the scale. The latter seems a lot worse, but in terms of scale and how often what's the total burden on people, which is it, or do we even know enough to say?
Oh, um, that's really tough. That is a really good question. Let me briefly make the case I see against both. So on the Bank Secrecy Act side of it, we do have some numbers that we can deal with, where we know that financial institutions in the United States spend $59 billion dollars a year complying with this regime. We know that they filed 27 million reports on Americans in a given year. And we know that out of all those reports, the IRS was only able to initiate about 372 criminal investigations. We don't know how many of those led to prosecution and how many led to conviction and sentencing. But I think it's safe to assume it's less than the number of investigations. So on this side, we have a problem where it's an inefficient process that is creating costs that are weighing down the entire financial system. Now, on the other side, when we're thinking about regulatory discretion being a tool used, whether it's through the Bank Secrecy Act or through the regulation of reputational risk or anything else that has enough of a gray area that regulators can pull it apart to create an entryway. I think you have another type of problem here where you brew uncertainty for these institutions and you create such a highly charged area that all of a sudden institutions, in the same way that they're overly sensitive to what might be suspicious, then they might become overly sensitive to what might become controversial or what might catch headlines or just what might catch too much attention. And there you get into a really dangerous place as well. I think the one silver lining for that side of it is that Operation Choke Point has been so widely condemned. The NRA came out on top in the Supreme Court case against Vullo, and people generally recognize that this is this discretionary abuse is blatant government overreach. So while it's probably the more sinister of the two options, I think there's a certain advantage to it, to dealing with it rather.
Mhm.
But both of them are just an absolute mess. And both areas are long overdue for some serious reforms. And Congress is going to have to take a very hard look at both the the Bank Secrecy Act regime and the red carpet that it's rolled out for regulators, because both of those creations really originated with things Congress has done.
Mhm. Well, and there's a kind of deeper conceptual point here, which you sort of like hinted at, which is that, with the again, on the one side, the sort of like the traditional bank regulation where um, certain transactions are flagged automatically and then they're considered suspicious and there's these reports that are filed, and then the sort of more kind of politically motivated uh, debanking moves on the other side. There's kind of an assumption that all of these things that these risks supposedly that we're facing are objective things, that they're measurable and there's numbers behind them, and so like, well, we just have to decide what's the right level of risk, or what the right level of risk we're allowing financial institutions to take on or not. And I would kind of question that, because I don't think this is even a lot of this is real to begin with. It's fake. Basically, I'm saying it's all fake. Um, so in part because the first half, these old rules are all sort of automated, where you have the suspicious activity reports or whatever kind of trips an algorithm, right? So you're required to report transactions over $10,000, and that's an old um, you know nominal dollar threshold from like 50 years ago. Like, it would be closer to $100,000 if it had been indexed for inflation. So it's kind of a small amount of money to be, just like all the people who were worried about the IRS auditing them for sending $600 over Venmo. Like, that's not very much, right? But but famously, uh, the bank regulators don't like you trying to get around that by putting through a transaction that's just under $10,000. So if you try and send someone, transfer between accounts $9,999, that is even more suspicious than a larger amount, because that is what's called structuring, right? So you're trying to like structure transactions so it falls below a threshold, and that's a crime. You can be charged with a crime just for doing that. Right. And so if you did say just under 10,000, you would also get flagged even if you didn't get directly investigated. And that's one of those, millions of activity reports that shows up every year. And so the assumption is that those suspicious activity reports represent actual suspicious activity. And my point is they don't. the vast majority of them are not suspicious in any way, but they had to come up with some numerical statistical way to track it. Otherwise, you would just have bank examiners sitting with a pile of paper a mile high. So that's what they came up with as the supposedly least bad solution. But it doesn't reflect an objective level of risk. It doesn't reflect any actual criminal activity. It doesn't reflect even the propensity for criminal activity. And so I think we're giving the old regime, maybe not you and I, but other people are giving it way too much credit for sort of keeping us safe or keeping the banking system safe when I don't think it does much of that at all. Um, but even on the other side, with bank regulators coming in and saying, "Oh, well, maybe you have risky clients," so maybe the sort of, again, this is the phrase, the reputational risk idea that if you've got a big bank and you've got a lot of clients and you want your corporation to have a good reputation in the world, on Wall Street, whatever, among shareholders, and so if everyone finds out you were you had a small business client that was doing some shady thing, then your reputation will suffer. And so that was sort of the Operation Choke Point. The premise behind it, at least, was that like your bank will look bad if people find out you have these shady clients. Um, One, you'd think that would be something for the bank to worry about. Like someone like like Jamie Dimon doesn't care what anyone thinks about his company, but he needs someone from the FDIC to come in and tell him that like he needs to look out for his reputation. Uh, but also that's subjective, right?
Yeah.
Like we said, you've got the one bank that like thinks guns are terrible and doesn't like them, and then you've got the coffee company who think guns are great and builds their whole brand around them, right? Like, what reputation do you want? It's not obvious which one you should want. Maybe you want a left wing, maybe you're Ben and Jerry's and you want the most left wing reputation, right? Or maybe you're, Old Glory Bank. Um, so, but it's in the eye of the beholder, right? So whoever is the like assistant deputy enforcement FDIC person, all of a sudden it's their personal, political, and moral, guideposts that are deciding what's good and what's bad, what's a good reputation, what's a shady reputation to have. But even more so, like you said, I think you said this in your piece about two kinds of debanking, that um, suggestions from regulators are never just suggestions if they have the power of the federal government behind them. And so a regulator can create reputational risk out of nothing just by investigating you, right? They can make you look bad just by the power they have in their back pocket, even if there's no sort of objective risk there in the first place. So that was kind of a rant on my side, but I'll put a question mark at the end of it, just like a good moderator should.
Well, I
Um,
think
how how deep should we go? Obviously, you know my answer already. In questioning some of these established systems about not just like, oh, there's some excess that we need to trim back, but like, are these legitimate ways to govern our banking system in the first place?
oh gosh. I think we have to go very deep to say the least, in considering how we've been conducting things over the last 50, 60 years at least. Um, One just quick point off of that is just to hammer in what you said about notices from the government are never just suggestions. During the original Operation Choke Point, when it became known or it was revealed what some of these Department of Justice officials were saying through FOIA requests, they were telling each other through memos and emails that sometimes all it takes is a letter from the government to get an account shut down. That was part of their explicit strategy. They knew the weight that that carried and they used that. So I think we have to look through this whole thing. And at the very least, we need to rethink the latitudes that regulators have been given. I think reputational risk should just be taken off the table. That should be left to the institutions to decide, left to the, as F.A. Hayek might say, the person on the spot to figure out the information there because so much of it can't be quantified. But I also think from the Bank Secrecy Act, there needs to be reforms on the confidentiality of of information. And then also on the regulatory side, there needs to be reforms on the confidentiality of supervisory information, because a lot of those letters as well are treated by regulators as confidential information that is under their regulatory purview. And they make this argument that all the information is the property of the regulator, so it only belongs to them and only they can give consent to who sees it. And often, even people from the bank within the institution have to get permission to see this information, which is just wild to think when it should be the information that's guiding the bank. I think that is sensitive information, but it's the institution who should have the ultimate say to give consent over who has access to, again, their information.
Mhm.
So, on the notion of how deep do we go, I think at the very least, that needs to be fixed, because that'll help us identify just where the system's gone awry when we have access to information. And that will pare back some of the most egregious violations that have taken place. But maybe going a few feet deeper, I think also the Bank Secrecy Act in general needs to be reformed, because this is just another instance of seeing how it's really not achieving its stated goals, and yet it really is putting costs on this system that weigh down both the largest of institutions and the smallest of institutions. And that hurts all of us along the way.
Well, yeah, I mean, all those billions of dollars that's spent on compliance that seems to be mostly like filing duplicative reports that nothing ever happens with. Just think of the points and miles we could be earning on our credit cards that the banks could be paying out instead of doing all of that. Um,
Well, not just that, think of all the accounts that will get opened as well. People who were just too small of an account, that the risk in the general terms, but also the risk in terms of Bank Secrecy Act compliance was too expensive to justify someone having a very small account. And if that burden's lowered, I would imagine as well, we'd see more people have access to the financial system. At least more people who want access will be able to have access.
so and so the question here is we've got a lot of problems, and so how do we fix these without overreaching? So we've got in Congress we've got something called the Fair Access to Banking Act. We've got other proposals. We've got a bunch of sort of similar copycat tribute proposals at the state level on a similar topic. So, we don't want the sort of Operation Choke Point scenario where some federal bureaucrat or state bureaucrat gets to say, well, I don't like this organization, don't give them a bank account. But I think I'll speak for both of us, and plenty of other people, don't want every bank forced to give accounts to people that they as a bank don't want to give an account to, right? Um, so the question is, well, how do we navigate that? And right now, a lot of conservatives are very revved up about this because a lot of the high-profile debanking cases have been targeting conservatives. We had former governor, former senator, former ambassador Sam Brown back at a CEI event a few months ago talking about this case. His religiously conservative nonprofit group was debanked, and so that's something conservatives are revved up about, just like they were before Elon Musk bought Twitter. And a lot of conservatives were revved up about, Twitter shadow banning or, throttling, conservative speech online. Uh, but of course, if you had a everyone has to carry everyone, everyone has to serve everyone rule, then you would have conservative institutions who were forced to promote like left-wing content, right? And I wouldn't like that either. So where do we draw the line, Nick?
Well, it's a tough question, because I think it comes from a good place in wanting to establish fair access, but it really just goes too far, because if you dig through the legislation, and for anyone who wants to do that. I have a paper on Cato's website called Fair Access to Banking, and it walks through each step and kind of takes you on a handheld tour of it. And if you look through it, you see that it doesn't really fix the most egregious problems we're facing here, where Operation Choke Point, what many are calling Operation Choke Point 2.0, the cases of Vulo versus NRA, and the like, all these cases of government pressure would not be fixed by this legislation. And it's unfortunate because I can see people coming to that conclusion and thinking that it will fix that under the name of fair access. But it does nothing of the sort because it preserves all the legal and regulatory channels for shutting down accounts. A case in point, many people point to when protesters had their accounts frozen in Canada, where
The trucker protests.
exactly. There, the prime minister invoked the Emergencies Act and used the anti-money laundering channels to order the banks to freeze the accounts. So, as much as I've condemned the act, it's a legal process. And if that parallel were to happen here, it would be fully permissible under the fair access approach. So I think we do have to draw a line where if you recognize the concern of government abuse, you should want to solve government abuse. That does not mean establishing even more restrictions on the financial market, especially when those restrictions have an explicit carve out that allow the government to still do whatever it wants. I think the much better approach is the one we've been talking about in terms of removing the confidentiality to increase transparency, and then pare back the tools that have been abused time and time again.
Well, yeah, I think there's a lot of situations where you have an interaction, you have a bad policy outcome that people don't like, and that it's an interaction between industry and the government is forcing companies to do something. And yet somehow the response is everyone's only mad at the companies. Like, shouldn't we be more mad at the government, the one
Well,
that has the power to make them to do this in the first place?
it's such a great, or rather illustrative example of the problem this confidentiality has, because no one knows that this is all going on. They only see the letter with their bank's logo across the top. They don't see at the bottom this letter brought to you by the U.S. government. They don't see all of that. I mean, a great example of this as well is when we surveyed Americans asking, "Do you effectively think the Fourth Amendment protects your financial privacy?" Vast majority of people said, "Yeah, of course. What are you talking about? That's a silly question." But that's not the case at all. And yet, people don't know that this surveillance is going on because, admittedly, it's in the weeds, and we're probably in the minority of folks who enjoy talking about this issue. But also, it's hidden by design. And so, when folks see something go wrong and they want to shout at someone, there's really not a lot of options, at least not easily recognizable options.
Mhm. All right. Well, uh, Nick, this has been an excellent conversation, and I know as you pointed out, there is a lot of ferment and action and attention being focused on this issue right now. And with the new administration in Washington, D.C., one of the things they are doing is opening up government records and investigating some things that were not investigated before. So we may see disclosure of more documents that were not available previously on the question of politicized debanking. So we will keep an eye on the Cato Institute website and on your work to see how this unfolds going forward. But before we go, feel free to direct people to anywhere online where they should find your stuff.
Oh gosh. So you can find all of my things on cato.org. Just look up Nicholas Anthony. You could find me on X at Econ with Nick. And then also I'm on Substack as well, at Banking, Bureaucracy, and Beyond. So you can find all my information there. I promise if you subscribe to my Substack, I don't post more than once a week. So it's not going to slam your inbox by any means.
Well, I want all the Nick Anthony content I can possibly get. So, um, all right, Nick, thanks again for being with us.
Absolutely. Thank you for having me.